I would like to introduce our esteemed guest speaker, Mr. Jasbir Bindra, who has great depth of knowledge in this field. He is the founder of Alpha Omega Project Management Services. Mr. Bindra is a certified AML specialist and a chartered accountant. With a distinguished career spanning over 27 years in the financial industry, covering market risk, credit finance, treasury operations, operational risk, and AML risk management. He has held senior positions like Country Head of Financial Crime Compliance, Regional CFO, MLRO, Regional Treasury Controller, and he has been on the board of a leading multinational bank. So, ladies and gentlemen, without taking any more of your time, over to Mr. Jasbir Bindra.
Thank you, Purnima. Good morning, everyone. So nice to see everybody on a Saturday morning, spending time with all of us on this exciting topic about compliance. So I will start this presentation. I will take you through this topic of financial crime compliance through the lens of money laundering. We'll go through the slides, and then if you have any questions, I think the arrangement is the Q&A is done at the end, right? Right. So what is money laundering? I think that has become very topical. It's something that is very important for all the businesses that are regulated under the AML regulations to understand what exactly is money laundering, how is it defined, how do the authorities look at it. So the law actually gives a very detailed definition of money laundering now in the UAE. This is there in the law number 20 of 2018. So it says any person having the knowledge that the funds are proceeds of a felony or misdemeanor and who willfully commits any of the following acts will be considered a perpetrator of the crime of money laundering. So transferring or converting proceeds or conducting any transaction with the aim of concealing or disguising their illegal source. So transferring the money, hiding the money, or deploying it in any transaction that helps to disguise the source. Concealing or disguising the true nature, source or location of the proceeds. So actually dealing with where the cash is, where is the money, what's happening to it. The method involving disposition, movement, ownership of the proceeds, acquiring, possessing or using the proceeds upon receipt, assisting the perpetrator of the predicate offense. So that last one actually is very interesting. So that means if somebody brings a bag of cash and leaves it in your office for a week saying, you know, I need some place to store it, I'll remove it, can you help me out? That is also money laundering. So very important aspect is that if you handle proceeds that have originated from any kind of illegal source, any kind of handling of those proceeds is an offense of money laundering, and money laundering is now under the law a criminal offense. So it's not it's not a civil matter, it becomes a criminal matter, and it doesn't matter under criminal law what is the amount involved. It doesn't matter whether it's 5,000 dirhams or 50 million dirhams. It becomes a criminal offense. So very important to be aware of that aspect. So what does money laundering, how does it actually work? The international convention, basically, typology, regardless of where it's done, where it happens, whether it happens in the US, Europe, Asia, there are always 3 stages: placement, layering, and integration. All illegal activity is designed to generate profits. Typically, most of those profits are generated 99% of the time in cash, because that is not easily traceable. So the first stage that everybody who has that illegally gained wealth, what they have to do is they end up with the cash, but in order to use it, they need to bring it into the economy, into the official economy. So the first stage, they need to bring it into the banking system. So that's placement, right? You try and bring that cash into the banking system. Once you've brought it into the banking system, next thing, you don't want anybody to know where the money came from or when it was introduced. So you want to try and hide that initial transaction that brought it into the system so it can't be detected. So you undertake a lot of transactions. Most of the time, those will be meaningless transactions. There's no underlying commercial rationale. This is known as layering. So you do a lot of transactions, transfers, cross-border transfers, payment to related companies, non-commercial payments, anything that will create a huge, basically, trail, which is not easy to follow. Once the money launderer is comfortable that the layering transaction has happened, tens if not hundreds of transactions, then the final stage, when they want to enjoy the proceeds, it's integration. So they will then go and invest that money in the legitimate economy. They can buy a house, they can buy a mansion in Emirates Hills, they can buy a business, they can invest. At that stage, it's almost impossible to detect money laundering. So one of the things that we need to be aware of, one of the red flags that everybody should be looking out for is when there is a payment which is done in high values of cash. Now, cash is a mainstay of the economy. Until COVID, most people did not even use, electronic channels. Now I'm seeing a lot more use of electronic channels, but cash is still used quite heavily. And it's quite well known that, you can do large transactions with large volumes of cash, almost no questions asked. So another news that came out recently, UK money laundering ring used network of women, one of them looking like a Kim Kardashian. Biggest ever money laundering case in the UK, 36 people, women working in white-collar jobs who were used as mules. That means basically people who carry cash. So they were recruited, they were paid very exorbitant fees, something like £8,000, to bring the cash into the UAE and then deploy it. In 1 year, they detected that over £100 million was brought in from the UK to UAE. And was brought in suitcases. It was packed in suitcases, £500,000 at a time. Each suitcase was weighing 40 kilos. Those people were traveling business class. Business class, you get a larger baggage allowance, right? The bags were covered with special chemicals, mouthwash, coat hangers were put in, sprayed with coffee, air freshener. So it's not easy to detect what's inside the suitcase. They were transported, they flew them, they brought it here, and then the cash was deployed. So some of you must be, thinking, laws have been amended here recently. Gold dealers already had to report all transactions over 55,000 dirhams, and now recently property dealers also have to report all transactions of 55,000 dirhams and above, where there's a cash element involved. So this is one of the things that actually, basically now puts it into context. So there are people who are committing crimes offshore, outside the UAE, and then they're able to use the UAE system, the financial system, or misuse it to commit the offense of money laundering. And because of that, the UAE gets a bad name. So the crime has not happened here. All the illegal funds are being generated somewhere else. The thing that's happening here is that fund is being deployed and then is being converted into what looks like white money or legitimate money. So £100 million transferred in 1 year. So imagine that's just one ring, one network. If you count all the networks, the amount of money that could be transported is almost unimaginable. £100 million, by the way, at that exchange rate at that time would have been around $500 million dirhams, 500 million dirhams. So another red flag that we need to be aware of in our businesses is tax evasion. So tax evasion now under the money laundering law is a criminal offense, is a money laundering offense. So if you evade taxes in your home country and you come here and you bring that money here and then you try and deploy that money, that's a criminal offense. So example, most of you would have seen, many of you, if not all of you, would have seen this recent headline, Dubai police arrest Sanjay Shah over the biggest $1.7 billion tax fraud. So this was committed in a European country. The guy was living here. He had signature villas, a number of signature villas. He's also well known in the UK as a philanthropist. So he's contributed a lot to charity. He's got his own personal charity and he's had some of the biggest pop groups come in. There's a charity for autism. So he supports that. But where did the money come from? He's been living here the past 5 years. And the issue is that, again, when you're dealing with people and you're sitting in your business, somebody comes to you looking like a very successful businessman, having a great reputation. How do you decide whether you can deal with that person? What checks do you do? How do you know that 5 years down the line, they're not going to be caught like this? And then what happens? So he was sought by the Danish authorities. What he did, basically, if you're an investor, if you invest in the stock market, you'll be aware there's this concept of cum dividend and ex dividend. So when a company announces dividends, their shares trade at a price which reflects that up to a certain date, they will be paid the dividend. So what the company does is it says that as of a certain date, they will recognize all the shareholders, and then after that date, whoever buys will not get the dividend. It will just be the record date will be so the X date, the new shareholders will not get the dividend. So this loophole he was able to exploit in the European law. So what happens is that when the company pays the dividend, they have to deduct the tax and give it to the tax authorities. And then whoever is not supposed to pay the tax is able to claim it back from the tax authorities. So he was able to use this particular mechanism to claim back taxes to the tune of around $2 billion. And brought it out. And by the time it was detected, it was too late. So again, that's a tax evasion, that's a fraud. If your business is regulated, how do you know when you're dealing with somebody who comes across as a respectable businessman that that their money is legitimate? A third angle to this, red flags, adverse media. So again, recently there's been news about the Gupta brothers have been arrested in the UAE. And the news headlines, wealthy Gupta brothers arrested in the UAE. Again, they've been living here for a number of years. So the question was being asked, what happened? If you go through the news, the issue has been that they were accused of bribery and corruption in South Africa. Proceeds of bribery and corruption under the money laundering law is also a criminal offense. So if you're handling those proceeds, if you're deploying those proceeds here in the UAE, that's a criminal offense. So if somebody takes a bribe in their home country or somewhere else, brings that money here, even if they bring it through legitimate banking channels, if the origination of the money is through an illegal source, that is illegal. That is money laundering. So again, you need to start thinking, right? If you're dealing with business people, if you're dealing with expatriate customers, your business is regulated. How do you get the comfort that the money that that person is bringing into your business is legitimate? That's a legal requirement now, right? That you need to make sure that you're not helping somebody commit money laundering. Now think about some of these common practices. So when I'm talking to people, I'm told that some of the people are doing this kind of business. Now think about it. Do you think this is money laundering? So somebody says that, okay, I run a travel agency. I've just helped somebody. There was a third party that came in from Africa. They brought in $500,000 worth of dirhams. I deposited that in my bank account, and I've remitted the funds to their to their bank account in the home country. So I asked him, how did you do that? Didn't the bank ask you any questions? And he said, oh yeah, they asked me the questions, but I had some ATM receipts from a previous withdrawal that I had done, and the bank was satisfied with that. Okay, so now what do you think? Would that have counted as money laundering? Second thing, sometimes, and this you'll see in the market, is somebody will argue for a discount, and they don't want to pay sales taxes and so on, and you'll see there's a market practice of under-invoicing. So the money that is being generated from under-invoicing, could that be considered money laundering? Think about it. Same goes for over-invoicing. So customer comes to you and says, I want you to increase the value of the goods that you're sending across, cross-border, wherever. Make the invoice different to what the value of the goods is. Is that money laundering? Finally, if there are transactions between related parties, you set up companies between family members, or you own group companies and you start transferring assets or money between them, and the pricing is not at an arm's length basis. Could that be construed as money laundering? So something to think about. Another angle to think about, is the use of cash always a sign of money laundering? Are there any groups of people who can legitimately use cash? So I've highlighted red flags that if you see large amounts of cash being used, be alert. But is cash always bad? So I've made a list of some people here who will legitimately use cash. So for example, there's set of population who cannot open a bank account, who are not eligible to open a bank account. So if you think about construction workers, for example, construction companies typically employ hundreds of workers, right? If somebody is employing 200 workers, average salary is 2,000 dirhams, that's 400,000 dirhams a month they'll pay in cash, right? And the construction workers can be somebody who earns as low as 500 dirhams to somebody who could be operating a crane and earning 10,000 dirhams. He might also be paid in cash. So that amount of cash is legitimately being transferred by certain businesses to their employees. So that's not illegal. So those people, they cannot be banks will not open accounts for them. They have no choice. They have to use cash. Tourists. Many of us would have traveled to overseas, to many countries as a tourist. How many times do we actually use our local credit card when we go abroad? Right? We don't. We tend to buy foreign exchange and we prefer to use cash to pay it there. One, because to avoid the extra 1% credit card charge, and to avoid the extra FX exchange rate, the bad exchange rate that we expect we'll get on a credit card. So again, tourists, when they travel, tend to use a lot of cash. Persons working on ships. This is something I found out recently from one of my colleagues who's a shippie, and he was saying, oh, we recently had to pay a large amount of cash. So what happens to sailors, people who are traveling on ships, when they go from port to port, and they have to be paid by the shipping company? Again, you can't expect sailors to have a bank account in every country that they visit. They have to be paid allowances, they have to be paid various things, they have to buy provisions for their ships. Those transactions are all done in cash. And finally, this is one that I kind of was thinking about culturally, because I recently had one of these, like North India, famous thing, kitties, right? You have a family kitty, your wives are part of a kitty, and quite often the money is contributed in cash. Now, if it's a small amount, 50, 100 dirhams, 500 dirhams, but if there are, maybe 20 people, that's 10,000 dirhams. But same 20 people, if it's a family kitty, might be 1,000 dirhams, might be 5,000, might even be 25,000 dirhams, depending on the, how wealthy the people are. In that case, again, you're generating a large amount of cash. It's not illegitimate, it's perfectly legitimate, it's coming from legitimate sources, but cash is being generated. So if you as a business then are dealing with that, how to tackle that? Is that money laundering? You have to think about that. So what to do? The answer, very simply, always is customer due diligence. You have to know your customers really well. You have to understand who your customer is. You have to understand their circumstances. You have to document everything. You have to understand their business and their profile. So I gave that last example of a kitty, right? Now, if I go into a Western economy, Western style, and I tell them that we have, they're amazed. They're saying, what? Why are you paying cash? What's the point of it? If I try and bank that money, they'll say, where did that money come from? But if I explain it to somebody who's the same cultural background, they immediately understand. Yeah, kitty, I know, yes. People get together and they pool cash together and they give cash to each other. So understanding your client is very, very important. Understanding what they do. Good knowledge of your customers is not just a compliance requirement, it can also be a good sales technique, because the better you know your customer, the more likely that you can get a cross-sell opportunity. So that's something, on the positive side, it's not all bad. It's actually something that can help you do more business with your clients. And finally, if you know your customers well, it will help you to protect your business, because if you understand your customers, then you can always explain and understand whether something is suspicious or not. But if you don't take the time to understand the customers, if you don't document that, then you put yourself at risk. So if you think about all those previous cases that I mentioned, Sanjay Shah, Gupta brothers, so all those people, all those service providers like yourselves that are sitting in this room who service those clients, are they at risk now? Will they come under the scrutiny now from the authorities to say, okay, you were working with these guys, did you check where the money came from? So that's one angle. The other aspect is, would those people want to actually advertise the fact that they were, the lawyer, the accountant, the property dealer for these guys? Or if you as a personal customer were to go and try and deal with these people, if you wanted an accountant, property dealer, or a lawyer, would you go to one that was acting on their behalf? Maybe not, because you don't want to be under the same scrutiny that the authorities will give to them now, thinking that, okay, these guys were acting for them. Maybe there was nothing illegal, but they will come under scrutiny. So I guess what I want to conclude with is that make sure you do your customer due diligence, do it really well, do it thinking that actually it's something that will not only protect your business, but also it is something that can ultimately help you win more business with your client. If you know your client better, if you know their circumstances, you can do more business with your client as well. That's it. Thank you.